Okay, so we are going to replay the TSLAbot, and we are on January 9th. So we are looking at January 9th with the brand new 2.1 version TSLAbot. And for those of you who aren't familiar with it, I'm going to do my best to demonstrate it here in this video. And so far, we have a pretty sizable gap up. I think it was 5.22%. So obviously we're gonna, in our buttons here, we're gonna have a, oops, I did not mean to do that. We have a bullish, kind of a bullish bias, and it looks like we're selling off a little bit. So what's gonna happen is when this candle finishes, I'm gonna go ahead and see if we can get a fill a little bit lower here. See if we can get in on the trade. So enter here, stop here with a, okay, it looks like we're in the trade, and a profit target up here. So in the, if you aren't familiar with the snapback, it basically, we're buying the break below and we're waiting for a kind of a reversal to go higher. And that's kind of what started happening here. You guys can keep an eye on the P&L as it is playing out. And again, this is January 9th. People ask me all the time, how do you know which strategy to use? The snapback, the orb, bullish, bearish. There's four possible combinations. And the short answer is your very first button, the bullish or bearish, is going to be based on the gap. So a gap over 2%, I want to trade in the direction of the gap. Now that's 99% of the time. There are some exceptions to that, but in this case, I just want to trade in the direction of the gap. And so we'll speed this up and see what happens. See if we can get some turnaround and get a little bit of a move higher. And then also, how do you know which strategy to use, the snapback or the orb? And in this case, for a bullish trade, if it breaks lower, if this very first candle comes in, the second candle breaks lower, I'm going to use the snapback. If it breaks above, I'm going to use the orb. And the orb is opening range breakout, and it kind of suggests a move in the same direction, kind of like a continuation, where the snapback is more like a reversal, right? So we got in because it went lower and we're waiting for a move higher. So this is an example, a demonstration of the bullish snapback. Let's see if I can speed this up a little bit and we can see how this ends up working. It looks like it's going to be doing well, and there we go. Quick win. This was set to a 1.2R. You'll see over here my profit taker was set to 1.2R, and I am using a 500K account, so $5,000 of risk, a quick $6,200, and that is on the TSLAbot using the bullish snapback. And literally all it does is it calculates everything for me. When I hit the go button, my orders are pre-calculated. I do have the ability to define how much stop loss padding, SL padding, there is. So if I wanted to look at the size of this candle, let's say that this candle represents $1.50. What it'll do is it'll move my stop down $1.50, and then it will add a little bit of padding. So 0.002% of padding. So instead of this being the $1.50, it'll put the padding, it'll put the actual stop just a little bit lower. And that's how the padding works. And then the candle number, you leave that to 1, and then cancel after this bottom setting just refers to if I'm not filled in X number of candles, in this case 5 candles, then go ahead and cancel the order. So that is an example. January 9th, again, 5.22% bullish gap up, which means I'm going to be bullish. In this case, we sold off a little bit, so I'm going to try to do the snapback, get a reversal, and a move higher. And I did exactly what the plan said and was rewarded. So if we were to look at another example, this is a bearish gap down, and we have fast forwarded to February 13th, and this was a 5.67% gap down. So we're automatically going to be bearish, right? Automatically bearish, and we'll see what happens, which way it breaks, if it breaks below or breaks above, and that will tell us what type of strategy we want to use. But ultimately what we're going to do is if it breaks above, we're going to use the snapback. If it breaks below, we're going to use the orb. And this, of course, is the opposite of the bullish version of this. So we'll see if we can get a break below. So what happens when this candle closes? And the reason we're bearish is because of the the gap down. It doesn't necessarily mean that it's going to go bearish, but that's kind of our bias just right out the gate. Okay, so I'm going to go ahead and throw out an order, see if we can break lower, which we do. There we go. In this case, we have the same exact thing. We have a stop loss up here with the padding and a take profit down here. And you guys may or may not realize this, but in the live version, this is of course a back test. In the live version, we are able to grab these red lines, these little, the stop or the profit target, and actually move them, grab them and move them and adjust them. We would never want to allow the stop, give it more room to lose, but we wouldn't mind, increasing, kind of tightening up the stop, protecting our profits, and or pushing the take profit a little bit better. In this case, we are at our max lot size, so it's not going to be a full size win. It will be a nice win, but it will not be a full 1.2R win. And there we go. So second win is $4,350. Of course, that's a 1.2R. In this case, because we had our max lot size, we didn't get the full unit of risk. And the reason was because our actual risk looks like it was only about 72 cents. The difference between these two numbers, about 72 cents. So not a full dollar of risk there. So that is an example of the bearish orb. And again, the orb is, it waits for a break below the bearish orb and looks for a continuation lower in the direction of the gap. So that is an example of a bearish orb. So now we're going to look at our third example, which is February 2nd. February 2nd was a 3.26% gap up to where it opened. And in this case, what we're going to do is, of course, we're going to be bullish by default because our bias will be bullish because of the gap. And what we're going to do is we're going to just make sure once this closes, we're going to click the orb, see if we can get filled. Oh, already in the trade. That was quick. And we'll see what happens here. In this case, you'll see that we are using a full size of risk. So 37.82, we're using less than the 50 lot max lot size. In this case, we'll see what happens. We'll see if we can hit that 1.2R target, and we'll speed this up just a little bit. And the question is, how did I know to use the orb in this case? And the question is a great question. And of course, because of the gap up, I'm automatically going to be bullish. But if we break above, I want to use the orb on the bullish. If we break below and I'm still bullish, I want to use the snapback. There we go. Boom, in and out with a couple quick wins on Tesla, and literally got in on one candle and out the very next. So quick, almost not quite full 1.2R, but rounding, of course. And that was the demonstration of the bullish orb. So we're going to retest and replay February 3rd. And February 3rd was actually a 2.29% gap down. So it actually gapped down, and within the first 6 minutes, it ended up selling off, or I'm sorry, in the first 6 minutes, it ended up getting bought up. And so the gap automatically filled. Now, in the situation where the gap fills within the first 5-6 minutes, I'm going to go from that gap down being a bearish bias to being a neutral bias. And when I'm neutral, that means I'm going to use the orb, bullish or bearish, whichever ways it breaks. So in this case, we again gapped down, and 2.29%. It was a gap and go, but we quickly got, the gap automatically filled. You don't see it because of the first 5 minutes of a cap. So I'm gonna make sure all my buttons work, and I'm going to go ahead and punch in an order here. And if we break below, I'm going to do a bearish orb. If we break above, I'm going to use the bullish orb. Looks like we're going to probably be doing a break above. There we go. And can I get filled? I did not get filled in my order. Well, not sure why, but there we go. Looks like it's going to run without me. And what a beautiful hammer. It is kind of at a strange location. Usually hammers are kind of at the bottom of kind of down here at the bottom of a downtrend with something like this, like a hammer here, signifying a reversal and a move higher. But in this case, yeah, that's what it looks like. And it might get us filled. We're going to get filled or not. Come on, let me speed this up a little bit. Looks like we got filled, and there we go. We hit our target. And so again, 1.2R, and we did gap down. So what you don't see is the very first 5 minutes of the market, because ACAP is closed during the first 5 minutes to minimize risk for bots and for prop trading. So in this case, this is another example of, this was a bullish orb, but in this case, we did fill that gap. So I went from being a bearish bias to just bullish, just because we broke above that first candle. Now, if we had broken below, I would have used a bearish orb, but in this case, we broke above. So again, you guys can see that 1, 2, 3, 4, 4 candles. Had we not got filled here, the order would have auto canceled. And that's essentially what this setting is right here, is it cancels after 5 candles, and that is the default. So that's another example. I got one more example I'm going to show you guys before the end of this video. So our last example is here on February 10th, where we had a 2.46% gap down on Tesla. So you guys can see it is a gap down previous for the close of the previous day. And in this case, what we want to do is, we already know we're going to be bearish. And depending on if we break above, we're going to use a snapback. If we break below, then we're going to use the bearish orb. If we break above, we're going to use the bearish snapback. So we'll see what happens. Which strategy to use? Sometimes you can win in both, either or, right? So sometimes you can use a snapback or the orb and still win in the same direction. And so that's really all it comes down to, is just understanding, recognizing which button makes sense. Obviously, if we close like this near the top of that candle, then of course that means we'll probably, let's do a bearish snapback. It means we're probably going to close and go higher, break higher next, which we did. So now we're in the trade, and we can go ahead and speed this up and kind of see what happens. Hopefully we break lower and go back to the low of that candle, and we get a successful trade. So starting to turn around. There we go. And let's see what happens. Let's speed this up a bit. Looks like we're going the other way. Well, here we go. There we go. Boom. So that is, looks like you could have got even more R's than that 1.2R that was calculated, but that's another 1.2R, $6,000 win. So again, this is how I use the TSLAbot, and this allows me to use some discretion and to make some manual decisions to help assist me. And then the buttons calculate everything, throw out my orders for me, and execute the strategy with the bias and the direction that I choose. And that is the basics of how the TSLAbot works. And the final piece, I'm going to show you our rules. So here's how I use the TSLAbot to play gaps on Tesla. I have done this on AMD and some other stocks, totally up to you. I do use it on the 1 minute chart, which technically in the funded account is the 6th 1 minute candle. It's the first 1 minute in ACAP, or the 6th 1 minute candle in Trading View. And some of you have asked, how do I know what the size of the gap is without doing some math? And I do have a free indicator there that shows you what the dollar amounts are, for the percentages rather, for the gaps. And here's the rules that I execute. You really only trade on days where the gap is 2% or higher. And the gap is the close of the day, the previous day, to the current open. It doesn't say anything at all about how the day moves. So it could gap down and get bought up and go higher. It could gap up and then sell off and go lower. It doesn't matter. The gap is from yesterday. It's really 2 points in time. Yesterday's close to today's open, and that's all it measures. So once it's opened, that number is calculated, it's locked in, and let me walk you through what that looks like on this. Let me flip over to my medium term time frame, and you'll see here on Tesla in the month of March, we actually had only 6 gaps on Tesla. So we had the 2nd, the 3rd, the 9th, the 10th, the 24th, and the 27th, right? And so those gaps I have pre-programmed in here that I only want to see gaps that are 2% or higher. If I say I only want to see 5% gaps, you'll recognize a lot of these go away, and it still graphs the gap. So if I wanted to see how big the gap is, I can still see it, right? You'll see that little mustard color changes, but it only highlights the retest gap or the gap and go in green or red, being bullish or bearish. And of course, if I set this to 2, which is the default, that means that it is using and only showing gaps that are 2% positive or 2% negative. So gap up of 2%, gap down of 2%. And in this case, that is how I determine whether I'm going to be bullish or bearish, is if we break lower on a bullish gap of 2% or more, if it breaks lower, I'm going to use the snapback. If it breaks higher, I'm going to use the orb. And then if we gap down, we're going to use break lower is going to use orb, and if it breaks higher, we're going to use a snapback. So we demonstrated all 4 of these. The only difference is this rule here is number 3, is if the gap is mostly filled within that first 6 minutes and the bias is now neutral, aka the orb strategy. And so you saw that we did that an example of that on February 3rd, where we gapped down, and then within 6 minutes we already filled the gap. So lots of buying coming in and pushing that price action higher. And then if a gap is bullish and the 7th 1-minute candle breaks below, you use the bullish snapback. Same thing if it breaks above, we're going to use the bullish orb. Or a gap down, breaks below, we're going to use the bearish orb. And if it gaps down and it breaks above, we're going to use the bearish snapback. And that's basically it in a nutshell. It does require some practice. It does require you to understand a few little things about trading. This does work, of course, in the real life trading funded account. So if you don't have one of those, grab one of those. Those are available at the website of reallifetrading.com/funding. And we do offer 4 different account sizes here. And the bot has some settings. The Tesla bot has settings. Shoot, all the bots have settings that you can adjust the risk parameters based on the size of account that you're running it in. So that's it. That's how it works. That's the TSLAbot in a nutshell. Please rewatch this video if you have any questions. And that is all I have for you regarding the TSLAbot and how I trade gaps. Thanks.